Hello, hello. Good to be back. How's everyone doing today? Hey Jen, thanks for turning up nice and early. As usual, we'll give it a couple of minutes before we get started. If you are joining us on TradingView or on YouTube, drop me a message or put a message into the chat. Let me know that you're here and that you can see me okay and hear me all right. Hey BL, I see that you've read all the analysis already, so very good. Hope you're all well. Have you been trading well? Last week was a bit of a market was all over the place. I was off on a secret mission, so I'm back and ready for this all over again. And I'm just past my phase 2 of my prop trading challenge. So full on now. Time to get another account. Phase 2 done, get another one going. Thanks, BL. Very good. I know I've heard a lot of people. I made good money on gold. Gold was trending all the way to the upside, so that's why I passed on my trading account. But I did hear a lot of people lost a lot, quite a bit on yesterday or last week's volatility. So good to see that you made money there. Thanks, Jen B. There's a big swing. I was down, and then after when it started trending, I made it all back. So very fortunate, very happy with that move. Alrighty. What I'll do as well, I'll put in this link while we give it that one more minute before we get started. Here's a link that I hope you will take time now to go register for. It will be right after this session. Right, it'll be right after this session where we'll be transiting into another stream where I'll be guiding you through more and preparing you more about the FOMC decision later this week, the Swiss National Bank decision later this week, and also the Bank of England's decision later this week as well. So we'll end this a little bit earlier, and then we'll transition into the other webinar. The link is there. So do register for it now. Do me that big favor, register, and I'll see you there after this session as well. Alrighty, so everyone's here. Put it into the chat. Let me know you're here. And we're good to go. I heard some got caught by gold last Friday. Yeah, well, gold was I don't want to say easy, but it was straightforward, right? Just look for buying opportunities. All right, okay, again. So thank you all. If you are a regular, good to have you back again. Sorry you had a 1 week break. So I think a lot of you might have forgotten about this session, but we're back here. So you're regular, thank you for attending the session. If you're new to the session, welcome. Do me that big favor. If you're watching it live or you're watching it after this session, put it into the chat. I think the chat still works after the live stream. Put it into the chat. Let me know where you're joining me from. I love to find out. Okay. And also, I'm not going to repeat this 20 times through the session. I'll do it once or maybe twice, once at the start, once at the end. Do me that big favor. Click that like and subscribe button on YouTube or on TradingView. Make sure you follow my profile. And while you're on the stream, click that little rocket ship button. I'm sure it helps with the algorithm somehow, gets us more views, more people joining the community. What I do here at 3 p.m. every day, Monday to Friday, apart from last week, is I do a daily market analysis where I look at the fundamentals, what has happened, what is likely to happen, the technicals, how prices are moving, all that combined to the trade setup, identifying potential trading opportunities for you guys. right? So we do this on a daily basis at 3 p.m. I look at the hourly chart just so that we try and identify possible trade ideas for the day, and then we'll come back again tomorrow to look at do a quick review, and then also into other possible setups. Hey Nick, how are you doing? Right, at any point in time, if you do have a question, please feel free to put it into the chat. Let me know. I'll be happy to elaborate. I'll be happy to explain further. And if you have any trades that you want to share, put it in as well. I'll be happy to look at that as well. Okay, so as usual, before we get started, a quick disclaimer: any information contained in this webinar should not be construed as advice and is presented as educational material only. Educational material, so you learn before you earn. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. I do look at many different possible trade setups. So please watch your leverage, manage your risk, and most importantly, it's your trading psychology. Don't try to make this, or don't think that this is a shortcut to untold wealth and riches. It is a long-term journey. When we are trading on a day-to-day basis. We're looking for this as a steady, progressive return and steady, progressive growth on your trading account. Okay. And lastly, the contents of this webinar are not intended to be a recommendation to trade a financial product. Same thing. Do your own due diligence. Don't jump into every trade just because I looked at it as a possible setup. Make sure it fits with your own trading strategy, your own trading methodology. How I trade, I look at the fundamentals first, and then I look at the technicals. I try to make sure that my fundamentals lines up together with my technicals before I get into a trade. I'm more trend following. So if it is a counter trend trade, I'll tend to sit out. Why I say this is because there are many people I know. One of the guys that I trade together with is more of a counter trend trader, right? It's more counter trend. So if you're more suitable or more comfortable for a counter trend trade, then you might be looking at this as, okay, where's the trend heading? Where can you look for counter trend opportunities? Okay, so make sure you fit it to your own trading strategy as well. With that said, let's get going. So as usual, what I'll do for this session is I will have a summary sheet here, right? And this summary sheet will be posted at the end of the session, right? It will be posted at the end of the session. So you can watch this whole thing. The summary sheet will be posted there as well. And then, you can get into the video again for more details, all right? So let's look at what happened in terms of the news. And because I haven't been around, let's do a quick review of what happened last week. So Monday last week, Fed announcement. This was regarding the SVB, I think. No, SVB. Yeah, SVB. Fed announcement. They said that, they're trying to make sure that everything is safe. People get the deposits back. Not to worry. The main focus for last week was this. Well, not the main focus. One of the focus for last week was the CPI data for the US. This time, no big surprise. So last month, Feb 14th, on Valentine's Day, it was 6.5. They expected it to drop to 6.2. It came out at 6.4. We saw big volatility across the board on the dollar index. This time, at 6.4, they expected to slow it down to 6. It did come out at 6, right? So this actually is one of the things that shows that CPI or inflation growth in the US is slowing down. However, in the most recent Chair Powell testimony, he did say that they are taking some of the data with a little bit of a pinch of salt, right? Might be a little bit delayed, might not show the true picture. So because of that, we haven't seen a huge move in terms of price volatility following this CPI data. Okay, I can show you here 14th of March. You can see here move this away, on the 14th of March at, what time was it? 9:30. So we only saw a small brief bounce up before continuation, and it's still consolidated along that 103.53 level. Right, so only a small upward move compared to on the 14th of Feb. Where was it? There we are, 14th of Feb at 9, where it came out at 6.4 instead of 6.2. We actually saw a big, you can see here, a big spike up and spike down, and then overall move up towards upside. A big continuation move following the news, right? Compared to most recently, where we only saw that, and then it's just still consolidated over the next couple of days. So that was the CPI data. Hey, Kate Chia, how are you doing? So that was the news on the CPI data Tuesday last week. Following on from that, we had more PPI data. We had retail sales numbers for the US. It was a bit overshadowed by what was happening in the SVB and the Credit Suisse situation. Right, at that point in time, we actually saw big upward move here on the dollar, right? A big upward move here on the dollar because the euro dollar was dropping strongly, right? The euro dollar went strongly to the downside because of Credit Suisse, right? With all the uncertainty on Credit Suisse, the question was, will the ECB on Thursday during the rate decision not do a 50 basis point rate hike? Right? Markets were starting to reconsider that, hey, they might be looking at a 35 basis point rate hike. Yield was dropping. I think yield was dropping. They were pricing out pricing in a possibility of a smaller rate hike. That's why we saw the euro dollar drop. And what we saw on Thursday came out 50 basis point rate hike from the ECB. You can see here on Thursday at ECB decision, spiked down 50 basis point rate hike, and consolidated in that area before trading up on Friday. Right, before trading up on Friday. So that's what happened there. Was not a big surprise, was not a big relatively not a big volatility move, because President Lagarde actually did come out and say the same things. 50 basis point rate hike. Next, they're still committed towards achieving a 2% inflation target. The next decisions will be data dependent. It's the same thing, and that's why we haven't seen any big surprises. Now we're going to be looking to see whether this is going to have an impact, whether now that Credit Suisse is going to be bought up by UBS at about half the price that it's worth, or half the price that it's supposed to be worth at, is this going to have a upward move, or is this going to relieve some uncertainty on the euro dollar, on the eurozone, and the banking sector overall? Right, so that was on Thursday, and then nothing much on Friday. It was the end of the week. We did see some retracements. You can see on Friday there, we did see some retracements before now possibly continuing to its upside. Same thing on the dollar. On Friday, we saw some retracements early on before continuing on. Okay, right now, dollar bouncing slightly higher again. So that's done for the previous week. Hi, Ideal. How are you? Hi, Billy Grill. Good to see you here. BL, yeah, it doesn't seem to have calmed. Actually, it did calm the market a little bit. The move that we're seeing now, especially on the euro dollar, that downward move, could be a little bit of a reaction, right? A reaction where people go, okay, they're looking to buy over Credit Suisse. We might be slightly over this situation. That could be one of the reasons why we see that move, but can't ignore the overall trend. We're still paying attention to that. I'm looking for a possible bounce, especially if these levels hold. Okay, I do notice that these levels are all wrong. It's not a resistance and support level. I'll update that later on. All right, so that is what happened last week. So let's look into this week. Right, we just early this morning, had a Fed announcement. Again, it is joint statement from the Bank of Canada, Bank of England, Bank of Japan, ECB, and SMB announcing a coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swap arrangements. It's really there to protect or to, I don't know what's the word, calm everyone down in terms of the preventing a bank run. Okay, so that was the news today. We have not much else coming out, right? Not much else to be released. So it's a little bit of a interesting trading day. I can tell you that I didn't get into any trades all the way until 1 hour before. 1 hour ago, US yen, I did this, right? I saw this trading down. I had this trade. So I sold at about the start of the hour, just a couple of minutes into the start of the hour. I had a 30 pip stop loss. I had a 60 pip take profit. So 1:2, and it went straight down, hit my take profit at 60 pips. I was on an M15 time frame. Yeah, so this is the start of the hour. I was slightly higher about there. So about a 30 pip stop loss and a 60 pip take profit. It shot down, closed me out. Super happy about that. I was thinking whether I wanted to get into another trade, whether this was going to continue to the downside. But fortunately, we have this session on. So I just thought, I'll wait. Good thing that I waited because it's rebounding back right now. Okay. Hey, Angel Case, you are slightly late, but no worries. Haven't missed out on too much at all. All right. So that's what happened. Now that was my trade on the US yen, 60 pip move within the hour. So I am super glad about that. And that's the only trade I had for today. That was the only trade I had for today. Within the hour, within the 45 minutes, it shot down and I'm out. Okay, I do not anticipate that there'll be many trades today, or rather there might be, but it's going to be choppy price action, so just be extra careful. Okay, why I say that there's not going to be many trades, there's not big price movers. A lot of the volatility today is possibly going to come from further developments in terms of what's going to happen on the SVB and what's going to happen on Credit Suisse. Is there further news coming out from the Feds and from the other central banks? Okay, it's going to be interesting this week because we do have the Canadian CPI to be released tomorrow, right? Canadian CPI to be released. And from what you remember, I hope you remember, is that the Bank of Canada kept their interest rates on hold the last session. So we didn't see a big change. If it does continue dropping, then there's going to be a good decision from the Bank of Canada. Pound or the UK with their CPI data to be released. Again, slowing inflation down. Good news. But that's all to the lead up for Thursday, where we do have the FOMC with a 25 basis point rate hike expected. What could happen? I'll tell you more about that later. The Swiss franc, 50 basis point rate hike expected, and then the Bank of England with a 25 basis point rate hike expected. I think a lot of this decision is going to be primed on the CPI data to be released the day before as well. Okay, so we'll look forward to that. And then a whole bunch of PMI numbers, which at this point I don't think is going to move markets too much. All right, so that's why I say that it's going to be a little bit quiet tonight or today, a bit of a choppy price action because it's all going to be primed towards Thursday. So with that said, let's start looking at the charts. And before I do that, if you want to find out more about Thursday's analysis, I'll put it into the chat again. The link is there. I'll end this a little bit earlier, right? A couple of 10 minutes earlier, and then we'll jump into this one that's happening at 4 p.m., at the turn of the hour, 4 p.m., where we'll be going into more details, getting you prepared early for the SMB, FOMC, Bank of England decision coming up. Okay? So let me just clear out. If I clear out all the drawings, will this be gone? Oh no. Ctrl Z. Okay. I can't clear out my lines easily, so I'll do it later. Dollar index traded down, found a good support at 103.53, more particularly at 103.72. Bouncing, looks like it's bouncing back up. But what I would actually pay attention to here is that downward trend line, that bearish trend line to the downside. Hey Jamil, how are you doing? Good to see you. Okay, so I'm looking, I don't mind the dollar bouncing right now, but I think what is likely to happen is that it's going to bounce, hit that level, and turn back down again, right? To test that 103.50 support level, right? Test, bounce up, test that level, and then turn back down. So I'm still looking here for the dollar index to possibly retest bearish trend line and then down to 103.50. Right, so I'm still looking for that dollar weakness to be applied. I'm still looking for that dollar weakness to come around. It has pushed up a little bit, and I'm still looking for that downside. Could it break 103.50? Possibly, but I think that any break to the downside might be brief, especially with the FOMC decision to be released later this week. Okay, if it does break 103.50, then the next key support level will possibly be at about 102.85, about there, 102.80. Right, so if it does break below 103.50, then we could see 102.80. But I think that for now, we're possibly going to see it, or for today, we're possibly going to see it down towards 103.50. Hey, Joe Mendes, how are you doing? All right, so that's the view on the dollar index. Now, looking at the Kiwi dollar. Okay, so without all of that, I'll clear this out. Kiwi dollar pushing towards the upside. I like that it's found a resistance at that 0.62, more specifically 0.6280 level. Okay, zooming right out, you can see that it's within that area. The last time, 1st of March, it tested 0.6275 or 80, and then it traded down. Right now, testing that level and trading back down again. Anticipating that dollar weakness, I'm looking for this to push up. I like how it's found this level. Right, it's found this level. Oops. It's found this level here and also here. And then now it's at this point again. If this holds, then we're going to see this push towards the upside. Another reason is that we could see that as a bit of an upward trend line. Right? Upward trend line pushing higher. Not as a strong one, so I'll take that away. In terms of a trade idea, zoom that down. I'm looking for a near-term resistance at about that 0.6310. Right? So if you look for this to bounce, A little bit more of an aggressive approach. If this bounces, you could be looking for a buying opportunity, say about 6260, right? 25, 30 pip stop loss, about a 50 pip take profit, a 1:2 risk reward ratio to the upside with a bit of a hesitation at 6280. This is a slightly more aggressive approach or trade setup. So I'll be looking for the Kiwi dollar. I'm looking for it to continue its uptrend. So I'm looking to buy from 0.6260. Stop loss at about 25. TP at about 50 pips. Okay. Any questions on the Kiwi dollar? No questions. Good. And it's moving now as well, so watch out for that. Aussie dollar forming a lot nicer. Clear all that for now, and you can see Aussie dollar. Last time we spoke about this, it did actually shoot up and hit our level, and you would only enter after it closes, so not at those points, but at that one, and it did come up halfway, came down, and then shot up to a take profit level. Okay, so I'll take that away for now. Aussie dollar has a stronger upward trend line that is nice. That is nicely. What's wrong with my mouse today? It's nicely respected, but I wouldn't go for the aggressive approach right now, right? Aussie dollar is bouncing off that 0.6670 level, right? It's bouncing off 0.6670 level. There's a resistance or near-term high at 6730. I would actually be more careful on the Aussie, mainly because there is a bit of a round number level at 0.67, right? So I'll be careful there. I think it's a bit too near. You could be looking at the Kiwi dollar first, and then after that, if it's done with the Kiwi dollar, that upward momentum is going to drag the Aussie up as well. Look for the Aussie to break above 6730 to the next high at about 6779, or I like 6780, right? 6780. So in that case, I'll be looking for, it's going to be a bit later, not something right now. I think the Kiwi will be happening earlier at about 6735, about a 40 pip take profit, about a 20 pip stop loss, just below that high towards the next resistance, 1:2 risk reward ratio again on the Aussie dollar. Okay, so you can see Kiwi dollar looks like it's happening sooner for that upward move. Aussie dollar, we need to wait a bit more, wait for it to break a few levels to the upside. Okay, so Aussie dollar again above 6735, 20 pip to 40 pips. So Aussie buy above 0.6735, stop loss 20, KP 40. Right, so this will be a bit later. I think it'll be later than NZDUSD. Okay. All good. You guys are a bit quiet. I hope it's clear for you guys. Any questions, do let me know. Then on to yen, right? Yen is still dropping. I wanted to sell this. Like I was telling you guys, I sold this down 60 pips. I am looking for further downside, missing the move right now. But it's okay. I think there is a good support level here, okay? So there's a big support here at the tail of 129.80. 129.80 is about 100 pips away, just about 100 pips away. Still looking for that continuation to the downside. I'm zooming it way out because we're talking about something in Feb at the levels. I think a good trigger will be where it broke at 130.60. Okay, so a bit late now to rush into the yen, onto the US yen. Might even see some retracements, but what you could be looking for is a quick trade later on to the downside. Short down, stop loss, take profit about 60, very tight stop loss about 30, 1:2 risk reward ratio to the downside for the US yen. Okay, so 130.50 towards 129.80. Right, just looking for that continuation down, looking for that US dollar weakness to continue pushing the US yen lower. So below 130, 130.60. My stop loss would be about, I keep forgetting my numbers, about 30 something pips, about 30 to 60 pips. Okay, so stop loss will be about 30. TP will be about 60. Okay, so that's another trade that, I did one already just then, 30 to 60 towards the downside, looking for this to break. I could be looking for another 30 pip stop loss, 60 pip trade to the downside. 120 pips for the day would be a fantastic day in my books. So I'll be happy with that. All right, would you be happy with 120 pips? Put it into the chat for a day. Put it into the chat, let me know. Would you be happy with 120 pips for a day? That's what I'll be looking for. Near-term resistance would be at about 131.60. So that's why I got into that to the downside. It looks like it's going to happen. This looks like it's going to happen quite quickly on the US yen. BL says yes. Of course you would. Everyone should be. Okay, I think this area will be quite quick. Okay. Now, next up, let's look at a pound dollar. Pound dollar. For those of you who are really good with patterns, can you tell me what pattern is this? Or is this even a valid pattern? I know that there is a level here. I can tell you I'm terrible at patterns, right? So, and then I see this happening. Right, I see this happening. It looked, to me, I thought it looked like a ascending triangle just because we had this pushing up and then it bouncing back up. But I think that for an ascending triangle, it needs to trade this way. It needs to bounce this way. All right. So given that it hasn't gone up and tested that resistance several times, I'm not sure whether it fits as an ascending triangle. But it's just interesting that I'm seeing this upward trend line. I'm seeing that resistance hold. Again, looking for that upside with that dollar weakness being applied. It does need to break above that 1.22 level first before we're going to see the upside. I think that it could go up, but the big driver will be on Thursday. Happy as a clown. Don't trade like a clown, just be happy as a clown. That'd be good. All right. I think that the big push will be on Thursday with the Bank of England interest rate decision. But I'll tell you more about that. Register with the link there. If it does break up, right, I'll have a key resistance here at 1.24, right? At 1.24, a big key resistance there. I'm looking at that as a big target. That would be my trade, right? I'll put this as a bit of a hesitation area here, right? The last time it came up to 1.2273 and then had a pin and turned back down. So a hesitation area there. But if I was going to like not do anything, I just want to set something and forget about it, take that risk, maybe size down a little bit, then this would be a trade that I would say, hey, could I be looking for this to break out at about 1.2230? Take profit 160 pips to the upside, stop loss 80 pips, a 1:2 risk reward ratio to the upside on the pound dollar. Right? This would be the laziest way to trade, bit higher risk because I do think that once it breaks up, it could retrace, test this level again, maybe even hit a stop loss and then go back up. I would only do this maybe later into Thursday. So laziest way is to look for that. Safer way would be to look for it to break, retrace back down, test this level again, 1.22, before buying back up. Okay, and if it does test, then you can actually look for a possibly lower entry and a tighter stop loss as well. So pound, buying above 1.22, buy a break of 1.22, 80 stop loss 80, TP 160. Good stuff. Watch out for the BOE decision on Thursday. Okay. Any questions? Okay. At this point, if you find everything good, interesting, informative, do help me out. Click that like, subscribe button, that thumbs up, that arrow, that rocket ship. Help me out with that algorithm. That's the last time I'm going to say it. The link is there as well. Do register. I will be telling you more about how to set up for the FOMC, SMB, and BOE rates decision on Thursday with the next webinar at 4 p.m. in about 30 minutes time or 20 minutes time. Okay. Euro dollar. Euro dollar had a good move. We saw this towards upside, hit our take profit. That big retrace that we saw all the way down was, oops, what did I do? Okay, that big retrace all the way down was because of Credit Suisse, right? Was because of Credit Suisse, where it saw it shoot down, and then found that support on Thursday. We saw this volatility here was because of the ECB rates decision, and then it traded back up. Okay, again, suddenly everywhere I'm looking, I see this ascending trend line that has been forming very well. Okay, and also I was looking at this to the downside, that 60%, and also this to the upside. Let me just find it. Yeah, that 23, so not that 60. Take that away. Okay, that 23%. Okay, so I was looking at this where 38.2 was at a nice level, right, where it formed that level and bounced up. I'm looking for this to push higher as well from that, looking at that point and that point for the upward trend line. So I was anticipating that the euro dollar could come down, test this level, and bounce back up. Right? Come down, test this horizontal support, diagonal upward trend line, and bounce back up. Joe Mendes, pound yen, I will get to that, to the upside. But I'm not going to be looking for any buying opportunities on the euro unless it breaks above that 1.0690 level. But I would rather round it up towards 1.07. 1.07 as a nice round number. If it breaks above 1.07, next swing high is at about 1.0760, right? So have a bit of patience, wait it out, don't rush into that trade. I know it looks like it's going up. Wait it out a while. I'll be looking for a buying opportunity above 1.07. So 1.0710, I can be very tight with my stop loss here, 20 pips stop loss because it's broken a round number resistance level to the upside. I'm looking for a similar move as what happened here on the 15th of March last week. So I'm looking for this quick move to the upside. 50 pip take profit, 20 pip stop loss, a 1:2.5 risk reward ratio to the upside on the euro dollar. If it breaks above 1.0760, then the next big level or intermediate level will be at about 1.08, right? So you can even be looking at a possible that way, right? 20 pip stop loss, almost 100 pip take profit. Once it comes towards that 1.0760, then move your stop loss up to protect the trade for a big move to the upside. All right, so I actually prefer this move on the euro dollar. A bit more patience, wait it out. Break above 1.07, look to buy. Okay, buying above 1.07, stop loss about 20 pips, TP about almost 100, but then we'll be looking for trailing stop loss. All right, there we go. Good. I hope you're finding this useful. With that, then let's look at pound yen like Joe Mendes asked. Okay, pound yen. Breaking lower. Clear out the lines for now. We have a support level here at 158.59. Okay, about 158.60. Currently at 159.60. So looks like it could go down 100 pips to the downside. Zoom it out. You can see that last time we got to this point was back in Feb, where it broke to the upside. Okay, below 158.60, the next big level would be 156.70. So what I'll be looking for here is to be extra safe, right? Why I say to be extra safe is because we just looked at the pound dollar. We just looked at the pound dollar and we were anticipating the upward move, a big upward move on the pound dollar. Pound strength is going to pull the pound yen to the upside, right? Pound strength is going to pull the pound yen to the upside. And if you look at the US yen, that downward move, although it does look like it's very likely to happen, is quite small, right? It's quite small, about 60, 70 pips to the downside. So when you look at the pound yen in this case, we could see it come down towards that 158.60 level. But I think that the pound dollar strength is going to could pull this up pull it up. Okay, I'm not saying to where. So just be extra careful if you're looking to sell down. We do have a resistance at about 162. I like the round number at 162 there. I think if you're looking to sell down, why I hesitate is because selling down from here, your stop loss is a bit random. Your stop loss could be anywhere. It could spike up, hit your stop, and then turn back down again. So I'll be a bit careful there. I would say maybe what you could be looking for is pound yen come down, test this level. If it looks like it's going to rebound with that dollar strength, then you could possibly be looking for a buying opportunity, say about 159 back up 300 pips, almost 300 pips to the upside. Stop loss tight at about 50, 60 pips. You're looking at 1:4, almost 1:5 risk reward ratio to the upside, given that pound dollar strength, right? Given the pound strength. Does it make sense to you, Joe Mendes, and to everyone else in terms of the pound yen? So I'd rather wait for it to drop, test this support level, look for it to bounce before looking to buy up. Okay. Where's my pound yen? Okay, I don't have pound yen there. So pound yen, I'll be looking to buy from support of, what was it? 158, no, 150, so 159. Buy from bounce of support 159, about a stop loss of 50 pips and TP of almost 300. Possibly a big move, could be a lot later as well. All right. Lydia, yes, I do think that US yen could go down hopefully another 60 pips, hopefully not before I get into my trade. So I do think that it's going to go down. We do have our US yen below 130.60, stop loss 30 pips, take profit 60 pips, possibly a quick trade there. All right. I'll do gold and then we'll look to transition to the other session. Okay. Again, if you haven't already, do join me. Right after this, we'll be jumping onto the other session there. Gold at 2,000. Gold at 2,000. Go back to my dollar index. Where's my gold here? Big move to the upside. Going to continue up. I look at this on H4 time frame. And where was my level? There we go. I saw 2,000, almost 2,000 there. The next big level is at 2,070. 2,070. I think this is going to continue to the upside, especially the way that gold moves is going to continue shooting up. I don't think it's going to retrace too much. So I think we're still going to look for this to climb towards 2070. Right? So we had it climbing to 1847 a week ago. Now it's going to climb to 2070. Look for it to break, look for it to close if price closes strongly above 2000. All right, take those away because we're not looking at that today. I'll tell you more about the US CAD and the Swiss franc at the next session because we do have the CPI data to be released tomorrow, so stay away from the CAD for now. All right. A lot of this will also or has been discussed at my profile here. Oops. All right, if you haven't already, do make sure you read the analysis, right? So these are all pre-discussed here. Gold, we were looking for it to get to that level at 1998. It's come close, looking for break to those levels. Why is it not at that point? Why is it 1988? Well, it should be showing me 2000. All right. So it's all discussed there as well. Okay. Again, I hope you had a good session. I see you at the next session. Links are there. Register for it. 10 minutes. In 10 minutes time, we'll jump onto that. So for now, trade well, trade safe. I'll see you next session. Take care now. Bye-bye.